It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, talking property news as we do 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. And I did say on Thursday just how rapidly the week was progressing, and suddenly the weekend is here again. Saturday, August the 24th, another weekend of real estate right across all states of Australia as we inch ever so closer to the official start of spring, not that far away. And this is a little bit novel. We're catching up with Matthew Hughes, the Managing Director of Capital Property Advisory there in Perth. And good morning, Matthew. Welcome to a Saturday morning. We don't normally talk in the weekend, do we?
Yeah, normally we do this on a Thursday morning, but it's great to be with you on a Saturday, and I appreciate the bump up into the prime time slot, Greg.
Well, I know how busy the weekends are for you, and you have hit the ground pretty much running since you returned from your European holiday. And you did mention that you had a plan to expand, which I want to talk about this morning. This is expanding your business in the second half of this year, which we are well into. So perhaps start there for us.
Yeah, exciting stuff for us over here. Look, we've had these plans in mind for some time. At a certain point, and we're not there yet or even close to it, but at a certain point, we're not going to be able to stand behind advice to buy in Perth. At a certain point, we'll have to tell our clients that it's reached a point in the cycle that you should be considering other markets. And so to make sure that we can continue to work with our clients and service their needs, whatever they may be, and give advice that has the right amount of integrity, we are moving into a national model. So we're expanding into very likely Victoria as our next market, and we'll be positioning ourselves to be able to buy in all the major capital cities in the coming 1 to 2 years. So that's pretty exciting for us and great for our clients. And we're just in the process of finalising the National Research Advisory Committee that we've set up just to help us get all of the data that we need from a macro level on these new markets. And then we will be hiring local people, local experts on the ground in each of these cities we operate in. I've been too vocal against borderless buyers agents in the past, so I can hardly go and do that myself now.
You've got to be on the ground, there's no doubt about that. At the moment, there's a bit of talk about the slowdown in the property market. However, I think it pretty much refers to the national property market, not so much Perth specifically.
Yeah, I think that's correct. We yet to see any evidence of a slowdown in Perth, either from a statistical standpoint or from what we're seeing on the ground. If anything, we might be seeing there's a little bit less heat in that lower price sector that has been driving the markets mostly to this point. And we're starting to see that demand shifting up through the market, which is quite typical. So we're seeing people who have built a fair bit of equity over the last few years, the last year especially, looking at upgrading their home. That demand is shifting up into that sort of 800 to 1.5 sort of price points at the moment. And we expect that to continue to move up through the market into the luxury end. So that's been interesting to see, and it's something we predicted a little while ago, just looking at the sales to listing ratios. Obviously, it was kicked off at the low end, but the sales to listing ratios have been changing in a positive way towards that middle and upper sector. I guess what you said about it is a national market commentary that you're reading a lot about. There seems to be more and more sort of doom and gloom and negative articles being written about the property market, but it's important to remember that that is the national market and it's made up of a lot of different markets within that. So we have seen areas like Brisbane and Adelaide who have been steaming along just behind Perth, starting to show some signs of slowing down, more so Brisbane at this stage, but I think Adelaide will follow in my opinion. They've got increasing stock levels, they've got much lower population growth. Lower incomes and lower income growth means that they're probably also closer to an affordability ceiling than WA. And then Sydney's growth has stalled to almost zero, which is to be expected when you're at those frothy levels that they are. And then Melbourne's the interesting one where it's already in negative territory, but I think it could represent good value for investors in the not too distant future. I think that's probably, we're not ready to move our investors across to there yet, but we are keeping a very close eye on it and doing our research at the moment and preparing for that when the time is right.
Yeah, so we were talking about all of those markets earlier in the week. In fact, on Monday, Nicola Powell was here from Domain, and I did mention about those prices in Perth just going up and up and up.
Absolutely. I mean, Perth, let's unpick Perth first of all. I mean, Perth is absolutely the crown of Australia's housing market at the moment. It has seen the strongest rates of growth. When you look at house prices in Perth, they're sitting at about $850,000. They grew by $448 per day, so every single day over the past year. And in dollar terms, that's the steepest rise a city has ever seen per day. Record high pricing. I do think there is an element, though, I always kind of say this point to just kind of place context. I do think the context is very important. We've got to remember Perth underperformed for many, many years compared to other cities.
Yeah, and that is the point, isn't it? It has been that quiet sleeper, which is why those prices and people have benefited by those prices going up and up and up.
Absolutely. And I guess if you look at our annual growth over the last year, in a vacuum, it looks like it's a market that has boomed and potentially could bust. But when you look at the fact that, like Nicholas said, it came off such a low base and after such a long period of underperformance due to a number of different factors, where we went basically 10 years without any growth. There was some movement up and down in that period, but after 10 years, we were basically back where we were 10 years previous. So it was coming off a very low base, and 25% growth in a year sounds like a lot, but we're still the third most affordable capital in the country with the highest yields. So a lot of these fundamental statistics point towards continued upward pressure on growth, in my view, and it sounds like she agrees.
Yeah, and just talking about the slowdown in Melbourne, what do you think is driving that? Because the population there, it has been strong, but once again, is it undervalued?
Yes, to the undervalued question. The population growth there has been strong overall, but what we've seen is that they're continuing to get the high level of international migrants that they always have, but their interstate net migration has not been great due to a number of different reasons that a lot of Victorians will all tell you about. A gentleman by the name of Dan Andrews is a bit of a dirty word at that state. And there's some fundamental reasons for the lack of performance, but one of the major reasons is that negative sentiment that's tied to the poor decision-making by the state government and their short-sighted economic and tax policies. But when we dig into and look more closely at those land tax policies specifically that are targeted unfairly towards investors, it's not as bad as it appears when you actually run the numbers and look at it as a quantum rather than a percentage. It's created a lot of bad sentiment, and it's got investors feeling disillusioned, and a lot of them are selling their investments, but that's resulting in more listings, and that's contributing in part to the softening in prices. But over time, if investors are exiting the market, that's going to result in less rental properties available for rents, and that's probably going to positively impact yields in a market where the yields are not fantastic. So if you look at all those things and you couple it with a potential drop in interest rates in the not too distant future, it could make for a catalyst for a bit of a rebound in 2025 in our view.
All right, we are talking to Matthew Hughes, our man on the ground in Perth this morning on our weekend. We'll come back, we'll talk more about investment and where you should be investing next.
Unlock the secrets of real estate and stay informed about the latest real estate buzz with hot market trends, emerging suburbs and hidden gems.
A lot of the buyers are younger families looking to get into the area for the long-term family homes. But we've also seen a rise in the parents helping their kids get into the market. Just recently, I sold a home to a young fellow, had his parents there at the auction, and they just wanted him to be nearby.
3.16 million with the median house price. I mean, you've got to have parents that are pretty well heeled to say, Johnny and Mary, we'd love you to stay close to mum and dad. Here's a pile of money, go out and buy yourself a home.
A lot of them aren't first home buyers. A lot of them are already in the market. They could be selling locally to come from, where we're seeing, good units now sort of in the $1 million range around Burwood. And then we're seeing semi-detached cottages. Ashfield has also become a strong market where they've been in the high 1s to 2 for semis. And we're seeing a lot of those people sell and upgrade into houses to get into something larger.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast.
And it is a Real Estate Saturday. Welcome into another weekend around the country. And if you're looking at investment properties at the moment, I think, Matthew, it's fair to say the only place that you're thinking about at the moment is Perth for investors to buy?
Yeah, that's right. Look, historically, as you know, we've been a Perth-based buyers agency buying exclusively in Perth. But now with the shift towards the national model, we have the option to put clients elsewhere. But we're not doing that just yet. We're set up and geared up and ready to move into Victoria, being the next market that we are likely to target. But we're not ready to start pushing investors in that direction just yet. We're not ready to tell people to stop buying in Perth just yet either. My view, and I think it's reflected by a few other key people that I've heard talk about this in WA recently, Gavin Hegney included, is that there's 10 to 20% growth left in this market. I think 10's pretty conservative. I don't think 20 is overly bullish. I try not to get too aggressive with my predictions about what's going to happen moving forward. But I think it's pretty reasonable to expect, based on the fact that we're still with that massive supply and demand disparity, and we're still not building anywhere enough in terms of what we need. There's going to be continued upward pressure on prices, obviously at a tapering rate at some point. We're not going to keep running at 2% a month, but I think that upward pressure will remain for some years. So people entering the market now, if you're buying the right asset in the right area, I think there's plenty of runway in front of us. But if you're buying the wrong asset and coming in at this point of a cycle, whether it's something regional or something in an area where there's too many investors, like a Rockingham, LGA or somewhere like that where we don't buy, then I think you're running the risk of seeing some additional growth, but potentially handing it all back when the market starts to soften and those areas soften more than the median.
Yeah, the right asset in the right location. So we should talk before we go about the economy in WA. Nationally, we hear talk of, well, there's quite a lot of it, doom and gloom and a potential recession. But WA is often counter-cyclical to the East Coast. So perhaps you can break that down for our listeners this morning.
Yeah, it seems to be a bit of a trend. When the East Coast is performing well, we're not, and vice versa. And that seems to be where we're trending again at the moment. So that sometimes can be to our benefit and it can sometimes be to our detriment. So we spoke about the elongated downturn we had previously. It was elongated for various reasons, but one of them was the fact that as our market was probably primed to start its recovery, there was some macroprudential lending policies implemented to slow down the East Coast, which further dampened our already pretty soft market. So sometimes it can work to our detriment like it did last time. This time we seem to be primed to take advantage of a potential drop in rates, a potential relaxing in macroprudential policy at some point. And if that times well with the current run that we're on, it could act like a bit of a turbo boost for the market over here. And in terms of the economy, CommSec, their State of the States report had us ranked first in relative economic growth. We're leading in population growth, construction work, housing finance growth, and we're second in a couple of other really key indicators as well. So whilst there has been probably the big glaring negative that you're reading about at the moment is the drop in the iron ore price, our cost of production over here with the big producers is very low. It's sitting in the low 80s, I think, at the moment, the iron ore price. But I think we're far less susceptible to being so intrinsically tied to that one key indicator as we have been in previous cycles. I think that our economy and even our resources sector are far more diversified. And I think a big part of what's been driving the growth in Perth over this cycle is less to do with investment into that industry and jobs in that industry and more to do with Perth itself as a maturing city and a city that is more on the global map and attracting a lot of people from not just interstate now, but also overseas.
Yeah, well, it's definitely performing. It continues to perform. Great to get all those talking points. Enjoy your weekend and look forward to catching you back in a few weeks' time.
Have a great weekend, mate.
We connect you to the best real estate information across Australia. The Real Estate Podcast.